Franklin D. Roosevelt once said, "Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it's about the safest investment in the world." And real estate is what we do. This is the Realtors Radio Network. There's no sense in overcomplicating real estate. And if you're a first-time home buyer, an investor, or a real estate agent, you're about to get useful, practical, and smart advice on every facet of real estate. Welcome to the Realtors Radio Network. Now your hosts, Santos Garcia, Marcos Suarez, and Dawn McCullough.
Hi, and welcome to another episode of Realtors Radio Network, back with another interview. For today, we have Alexander Arcelay. He's a good friend of ours. He serves Crown Home Mortgage as branch manager, and he's been into the real estate and mortgage industry for more than 20 years. Alex has been recognized among the top mortgage originators year after year and featured on New Jersey Monthly Magazine since 2014. Alex, thank you so much for being here.
Hey, good morning, Santos, Marcos, and Dawn. Thank you so much for having me.
Good morning.
How are you doing
Glad
today?
to have you here.
Fantastic. I mean, it's Friday, right? So,
That's it.
actually, does that mean anything in real
It doesn't
estate?
mean anything for us,
That's just the beginning of the week.
Exactly.
but it's
like-
nice for the listeners to know that it's Friday. It'll make them feel good.
It's like Monday for us, right?
It's a Monday.
Kind of.
You know, I often used to say Sunday evening was kind of our Sunday evening as real estate agents. It's kind of like what other people's Friday evenings are like, right?
Right.
Like you can't wait till Friday night.
Right.
We can't wait till Sunday night because the
Right.
madness of the weekend is over.
It's
Yeah,
over.
Yeah, because you get ready for Saturday and Sunday open houses, and then, yeah, makes sense.
Yeah.
Okay. Alex, let's jump right into your background, how you got into real estate. So I know you used to work as a real estate agent. You used to work for IKEA designing kitchens on the weekends. So I wonder how you used to manage, like, doing the kitchens on the weekend plus open houses. You had a regular 9 to 5 with a bank, and you then transitioned to mortgages. Do you mind telling us a little bit about that?
Absolutely. And not to forget, I was also attending school. So
That's right.
I think during that period, I spent 3 years working straight, whether it was going to class at night or in the morning, attending an open house on the weekend, working the evenings during the week at IKEA, and also working Saturday mornings and in the bank.
And the flight attendant job too, right?
Yeah, so that came in after. That's what determined whether I was going to stay on the ground and do mortgages or fly around and be a flight attendant, because I do have a passion for flight. Yes.
So you started in 2001, right, with the license?
2001 is when I got my real estate license, and I had the honor to meet Marcos, who has been one of the many great mentors I've had in my life. And we were rocking and rolling through about 2003, 2004.
Yeah.
And it was overwhelming. And then I thought about quitting real estate. And through some great leadership and some friends, mutual friends at Marcos, and I have the opportunity to switch into the mortgage environment as a full-time career versus dropping the other three things I was doing and becoming a flight attendant was, the decision that I had to make in August of 2004. Well, between July and August of 2004. And I reached out to my grandmother, and her words were exactly this. Son, why don't you just stay on the ground? And it made my decision very easy. She's also been a great mentor, not just a grandmother, financially and in all aspects of life. And that really allowed me to pivot and put my focus full-time into real estate, particularly in the mortgage sector. And I've loved it ever since.
It paid off. It was a good gamble.
It has certainly been a great decision. Absolutely.
Good.
Okay, I'm aware that you have like a really good relationship with Marcos back then too, and Marcos was one of the main reasons what propel you to get into banking. Can you tell us share a little bit about that?
Oh my goodness. I don't know. Well, it's funny because we had so many things going on back then. And remember, there were transactions. 2004. For those of you that don't recall that era of real estate, the industry was just going crazy. The sales were starting to go through the roof. Things were, even if you were a bad realtor, you were doing well. But and Alex was a great realtor doing well, but he knew that he could do better somewhere else. And he was like, I could probably do better as a flight attendant. I could probably do better. You even had some acting gigs.
Oh my God!
I don't know if I was supposed to say that live on the air. But
Wait a minute. What else can we dig up?
Wait,
about him?
and he was into working out. I remember the whole Nike thing. I remember this man was like had a passion for everything. But
Wait,
you
used to work for Nike too?
No.
Not
It
exactly.
was like an acting thing because he was a fit guy his whole life, but back then he looked like he could have been a baseball player, could have been he could have done a bunch of different ads for Nike in every different sport, and he would have looked the part, So he could have gone so many different directions, and then he's thinking about the financial world, and he went to school for it. He had this inkling of an idea of maybe I should be in the mortgage side of real estate rather than and for us, we used to chase the business. It was also a different way of working, and Alex was like, I'm thinking of trying this out, and I'm like, oh, I know somebody in finance, and the back then in that company they had its own branch of mortgages. And we decided to, look into that. I put in just a small word, really. I really didn't have anything to do with his, getting accepted or anything. I just said, listen, he has my vote. If my vote counts for anything. And I was a manager for that company, so, broker there. And so they listened to me, but it wasn't he didn't get in because of me. I don't want it to seem that way. I just put in a good word. And I happened to be friends with
maybe we can get a little cut. Can we get some override on it?
I happened to be friends with the person who did the hiring there, but it really he did his own work, and they liked him for him. They loved his attitude, his go get mentality. The man was always driven, so that was easy for them to take him in, and he embraced the whole world. I mean, for that particular company, he was literally the number one loan officer for the entire company, not for that office, not for that county, for the entire country. This man was the number one loan officer, so he's literally beloved all the way around. So
I love it. So I guess the number one is your favorite number, right? Right
It
before
is.
the podcast.
Are there other numbers?
There are other numbers.
I didn't know.
13. I know that sounds crazy, but
13 is actually lucky.
it's my wedding anniversary. So,
yeah.
And Marcos was at my wedding.
Yes.
Of course. So when I'm transitioning to something else, but going back to that number 13, we found the lake house that we purchased back in 2012 or 2013, actually.
13.
Yeah, there it is again. My middle son was born on the 13th. Our wedding anniversary is the 13th. So when we found this vacation house, the first thing my wife said, "Oh my God, it's 13! It's meant to be." And
Wow.
that's how that landed. So every time we see 13, the exception of a 13th floor in a hotel,
Which you won't find.
They don't have that.
you won't
They don't
find
ha-
it.
Yeah, they don't have them.
But I was on a cruise ship, and we were on the 13th floor.
On the cruise ship, really?
On the cruise ship, yes. There was a 13th,
So maybe it only applies to land, because you never find a 13th floor in a building.
Now,
They skip over it.
Is that a U.S. thing, or is it across the world? I'm not sure.
You know what?
That's
That's
a
a
good
good question. Huh.
All right, everybody go find an elevator today.
I'm gonna figure that
That'll
out.
be interesting. Yeah.
Google. We can
Yeah,
Google.
I'm gonna Google that, and not only that, every time I get into an elevator, I'm gonna look for the number. I'm like,
Right. So we actually have very specific questions to ask you, or a question, because it's for some reason we've all been getting, and I'm sure you have too.
Yes.
We've all been getting that one question of, if I have an 800 credit score, why am I being penalized for having a good score? And why are people with bad credit getting a break?
Yes.
So
So should we have a disclaimer here?
This is-
Pay your bills.
yes, pay your
pay
bills.
your
people.
always want
Always
to
pay your
have-
bills.
Alex, a lot of my clients been sending me memes and social media posts on the lines of unfair tax on mortgage borrowers with high credit scores, or like internet memes suggesting that someone should lower their credit score to get a better deal. Like,
No.
what do you have to say about that?
Well, first and foremost, please do not do that. Okay, let's clarify the elephant in the room here, right?
Yes.
Let's go into it. So, look, for many years, credit has been an important factor of what impacts your interest rate, and oftentimes those add-ons and those costs are referred to as LLPAs. That stands for loan level pricing adjustments, or loan level price adjustments, and it essentially takes the DNA of the customer in terms of their percentage of down payment, the credit score, and the type of home that they're purchasing. And it has a series of loan level pricing adjustments based on risk. Well, we know that lower credit scores typically equate to higher risk. And the gap between someone with a very good credit score, north of 740, versus someone that may be a first-time home buyer, or a member of an underserved community, statistically, they have lower credit scores. And so the attempt that the government's making here is to level out that playing field a little bit and reduce the cost of those loan level pricing adjustments for borrowers with lower credit scores. And borrowers with excellent credit scores, such as north of 760 and 780, that's still business as usual. They really went into the borrowers with credit scores between 700 and 740 and essentially made the cost of those loan level pricing adjustments slightly higher. But please do not confuse that with a 620 credit score equates a better interest rate than someone with a 760 or an 800 credit score, because that is not true. And you should strive to continue to bring up your scores and pay your bills on time and use a moderate percentage of your credit limits when it comes to your credit use, because these are the things that will influence your credit positively and allow it to grow. And so for the record, a higher credit score will provide you a better rate versus a lower credit score, regardless of whether you're a first-time home buyer or not. And anyone striving to reduce their credit score to get a better rate is going to pay a price for the long term, because that loan is amortized over 30 years and the interest rate will be higher, and so will the amount of interest that you'll pay over the life of the loan. So not a good move, but there are indeed a lot of funny memes floating around, and I've probably answered more calls and texts regarding this than anything else in the last 30 days. Now, I'll share one more thing with you. Agencies like Fannie Mae and Freddie Mac, who are often referred to as GSEs, or government entities, quasi-owned government sponsored entities, have been communicating and implementing these policies since last year. In January of this year, this information was released with the purpose of loans that get delivered to these agencies by May 1st, that they have to implement these fees. So guess what? For the last 2.5 to 3 months, all the mortgages that have closed usually get packaged in a 60 to 90-day timeline. So all the loans that have closed in the last 2 to 3 months have already had these fee structure built into it, because they have to be delivered to Fannie Mae and Freddie Mac by May 1st.
Right.
So this is technically old news, but the news media just
got to
picked it up.
Mm-hmm.
And you know what? The Biden mortgage rate cuts. Well, let's get that straight. That's the headline that I keep getting. That's what I keep seeing. The agency that actually handles all this stuff is referred to as FHFA, not to be confused with FHA. FHFA is the Federal Housing Finance Administration. And their job, this agency was established in 2008 after the Recovery Act to monitor the actions of Fannie Mae and Freddie Mac and provide guidance. And so that's really the agency that monitors this. And the intention is that, look, statistically, underserved communities, potentially in the Hispanic community and the African American community, statistically have lower credit scores. And the government does want to have a proactive role in leveling the playing field and allowing home ownership for these communities to thrive and become homeowners. And that's why they're just making the cost of borrowing for those credit scores slightly lower than what it was in the past. And could we agree that they're subsidizing it slightly with clients in a higher income level bracket? Yes. Very similar to what we see with the middle class paying the highest tax break, which often drips down into communities of lower income, and it helps them with resources.
So basically, I'm just going to backtrack a little bit. The president had nothing to do with that program.
Well, look,
because it sounds like it's somebody else made that decision.
Yeah, it was FHFA in conjunction with the GSEs, Fannie Mae, Freddie Mac, and so forth.
In an attempt to help a certain part of the nation. So
exactly,
it wasn't specifically to hurt one thing or another. It was just to help, And how does that affect someone with, let's say, an 800 credit score? I mean, does it actually, is it a whole point? Is it 2 points? Is it an eighth? Is there a number that was good? Oh, it's going to hurt, but only this amount. So
that's a great question. For one of the other additional changes that they made is that up until the earlier part of this year, an excellent credit score for mortgage guidelines was 740 and higher. There was nothing else. And typically for mortgage purposes, your credit scores range from a low of 350 to a high of 850. And it runs in increments of 20, right? So you got the 600 to 619, 620 to 639, and so forth. And for conventional mortgages, primarily, the going score is you want to thrive for at least a 620 or greater just to meet their general guidelines. And once you hit at 740 or greater, that would be considered excellent. Well, as of this year, they added 2 additional tiers, the 740 to 759 and 760 to 780. So now 780 and greater is considered that perfect credit score. And so those borrowers that are falling in the 740 category that are doing 20% down saw an impact of about 0.5 or 50 basis 0.5 percentage increase in loan level pricing adjustments. Whereas now 0.875, and in the past it was 0.25. So technically it's 0.625 is the difference that those 740, 720 credit borrowers have faced as a result of these loan level pricing adjustments. But ironically, the window that's impacted, if you were to think of a matrix, such as the tiles I'm looking at here, the sound tiles, look at a matrix of that. On the left, you have all the credit score tiers. And to the right, you have how these loan level pricing adjustments are impacted by percentage of down payment. One of the advantages that we saw is that before, in the past, if you were doing 40% down, if the going rate for a mortgage was 6% and you had a 650 credit score with a 40% down payment, you would have 0 loan level pricing adjustments because you had so much equity in the transaction. But yet, if you had a 620 score or a 640 score, you would still be paying loan level pricing adjustment fees. Now, with 40% down or 70% down, that gets completely wiped out at all credit categories.
Oh, okay.
Yes. So now the borrowers that are doing 25% down, 20% down, those are the ones that are really affected by these loan level pricing adjustments. And respectfully, anyone with a 680 credit score below will benefit from lower loan level pricing adjustments from the past compared to the borrowers with the 700 to 740 category, which is sort of paying a little bit of an extra premium. So it's really a smaller target than most people perceive. And you would have to look at these tables to really understand it on a granular level.
So really it's not affecting the vast majority of people out there.
It hasn't. No, not at all, because in reality, banks have been pricing this into their loans for the last 2.5 months already. And
no one's complained until they started hearing the media
exactly
talk about it.
They're running low on news. So.
Yeah,
they had to come up
that
with something.
has to be it. That has to be it. They were running low on news.
Well,
yeah.
It's almost like when you see the data reports coming up on housing numbers. Housing numbers drop. No. Inventory is 200,000 units less. So effectively, the amount of homes in the market has dropped because of the demand and the fact that every house that goes on the market is lasting less than a week.
Right.
But the market's still thriving. There's still an inventory issue, and everyone's buying, from first-timers to trade-up buyers to downsize buyers.
Right.
there's just not enough inventory.
Right.
That's the real issue.
Yeah.
If the government wants to do anything great, offer some great tax incentive for sellers to put more homes on the market. But,
Right.
you know,
or
Can,
even
can
to
we repeat that?
lower
Can we?
lower construction prices, the lumber, all this other stuff. So let's figure out a way for builders to make brand new homes cheaper, quicker. You know, the whole thing. You know, there's so many ways that we could improve this low inventory. You know, I hope the government is listening to our podcast.
Oh,
we
yes.
I need to add one thing because I have not seen it in any of the news feeds that we've seen here. They did something even better that no one's talking about. In all of these communities have a county median income. And in the northeast, in northern New Jersey, for example, that tends to be somewhere between 90,000 and 106,000. And so, what if you're a first-time home buyer and your income is within 120% of that level? So if you have an income of 135,000 in most counties in northern New Jersey or below, all those loan level pricing adjustments are wiped out.
Oh.
Oh, wow.
Have you seen that on the news?
No.
No.
Why
Do you
hasn't
know
that
why?
made the news?
Don't you know why?
Because it's good news.
Right.
That's a
That
greater
doesn't sell.
benefit.
That doesn't
That is a
sell.
greater benefit to all of the buyers. And that's one of the best things that we've seen develop, but no one really talks about it.
Wow.
It wouldn't in the eyes of the media, that would not generate enough buzz, right? It has to be negative. It has to be something that's going to get
Well,
emotion stirred up and
The Sky
anger
is
and-
Falling sells more newspapers than, hey, it's a great day out.
You're
And
right.
everybody forgets about it.
Yeah, fear
know.
sells more.
Don't look up. There's a meteor coming. You know, that sells a lot of papers. You know, that's hysteria is big news.
Absolutely.
But good
And
news seems to just fade away. So could you just say that again, please, just so that our listeners get to hear it twice?
So first-time home buyers who meet 120% of the median income for those counties have the ability to purchase their first home without any loan level pricing adjustments because the agencies are actually waiving that in order to continue to propel home ownership among first-time home buyers without having the negative impact of losing affordability by having all these costly loan level pricing adjustments. The condo market in particular is one that can become very expensive. When you purchase a condo, you have so I'll give you a quick example if we have time.
Sure.
Let's assume that the base rate on a mortgage today is 6%, but our customer is putting 5% down. They're a first-time home buyer. You know, let's say we have an educator here in New Jersey earning $85,000 a year, and that educator is purchasing their first condo. They finish paying some of their student loans. They've saved enough money to put 5% down, and they're buying a condo. Well, per definition of the loan level pricing adjustments, doing 5% on a condo will have a loan level pricing adjustment of 0.75. Now, if this was to be on a $400,000 loan, 0.75 equals $3,000. In addition to that, they have a loan level price. Let's say that this educator has a 700 credit score, and by doing 5% down, they now have a loan level pricing adjustment equivalent to 1 point of the loan amount. So now they have 1.75 in loan level pricing adjustments. We're at a cost of $7,000. Now, the way mortgage interest rate works is that you have a variety of interest rates that come up on your table. So if you were a borrower without those loan level pricing adjustments, the rate that you can attain is 6% with no additional costs. But now you have the 1 point loan level pricing adjustments. You got the 3/4 of a point condo adjustment, which adds up to $7,000 on a $400,000 loan. And the consumer may not have the liquidity to pay that. So what's the alternative? As the interest rate brackets go higher, they provide a rebate back, or the equivalency of a negative loan level pricing adjustment. So oftentimes, if we inflate the rate to 7%, 7% may provide a rebate equivalent to, let's say, $6,000. And now we can effectively give that consumer a rate of 7%, and the cost that was initially costing them $7,000 will be now at the cost of $1,000. And that's how we combat those loan level pricing adjustments. Well, because this educator meets the income for the county, all of those get waived. and they have the ability to extract that interest rate of 6% without the costly impact of those loan level pricing adjustments. And for those who have not owned a home in 3 years, by definition, if you have not owned a home in 3 years, you are considered a first-time home buyer.
And you can use that FHA program again.
You can. It doesn't have to be FHA. It's conventional.
You're automatically first-time home buyer.
Yeah, and
Awesome.
conventional FHA loans are not restricted to first-time home buyers. By the way,
Right.
that's often something we hear often. But
Yes.
Big misconception, sure.
exactly. So I hope that I was able to address that with my examples here, or putting a dollar figure next to it.
Well, we appreciate it because I think it's something that, for sure, the news isn't going to kind of dissect, right? In the way that I think there's a maybe, I don't know if we would say a misunderstanding or just not even sort of an explanation or education on how that whole process works, right? So somebody just takes a little piece of news, frightens everybody, everybody's in a panic, and no one's really explaining it.
Right.
Yeah, I've actually clicked on a couple of articles from different organizations, some which I respect more than others, and just to extract, where their common ground is. And in many of the headlines, one thing that stands out is that they're all saying that this is an attempt to level a playing field a little bit and close that gap between how expensive it was for these lower credit borrowers versus the higher credit borrowers, and that they've reduced that gap. And I'll give you another example. If we were to take a consumer with a 760 credit score doing 10% down, for example, their loan level pricing adjustment on a single family dwelling would be 0.5%. The borrower with the 660 credit score, their loan level pricing adjustment would be 1.75%. Now that may have been 2.25% or even 2.5% in the past. But as you can see from that example, it is not cheaper.
Exactly.
The cost has simply been reduced.
I love that you clarify that, because it's just like everybody was thinking, oh, I should just go and, lower my score to get a better deal. But what you're saying makes sense. It's being lower based on where it was supposed to be, right? If it was supposed to be a 2.5, now you get a 1 point discount, 1% discount, right? So it lowers to... if it was 2.5, now you get the 1.5, right?
Exactly.
So, okay.
Yeah, so it's definitely a reduction in that. And the GSEs, Fannie Mae, Freddie Mac, they use that resource and that additional capital to be able to continue to promote other programs to potentially help a segment of home buyers that doesn't exist today. They try to invest that into communities that can benefit from more housing, or put programs together like the Fannie Mae the Freddie Mac Home Possible loan, which allows income borrowers that are at 80% of the median sales price or below to also receive these loan level pricing adjustments waivers, and also receive discounted mortgage insurance premiums when they're doing less than 20%.
Okay.
Yeah. So there are a lot of good positives here. One of the negatives that they had initially proposed, which the mortgage industry has really been lobbying to get them to balance it out, is that they also included a loan level price adjustment if your debt to income ratio was above 40%.
Right.
But think about the issues that can create in the mortgage industry, right? I'll pre-approve you. I'll quote you a particular rate and a set of loan level pricing adjustments. You find the house. When I submit the loan, and let's pretend it's August, right? When do new property taxes usually kick in? Between August and October.
Yeah.
So in July, we go under contract. We think your taxes are $12,000 a year. Your debt ratio is at 39%. We get the title policy and your tax certification in August before closing, and see that your taxes are now $13,000, and your debt to income ratio jumps to 40.5.
Yeah.
We're now going to hit you with an additional cost that can vary from 0.25 to 0.375 in loan level pricing adjustments. And guess what? Now we got to come up last minute to our customer and say, "Oh, sorry, we got to hit you up with another fee," or "We're not closing on time because we got to redisclose your loan because there's higher fees." The consumers are not going to have an easy time understanding this.
No.
So our lobbying has helped slightly because the GSEs have pushed that now to August. But hopefully the goal would be that they remove that particular loan level pricing adjustment, because typically the higher debt ratio loans are the ones in the underserved communities. So, it's like we're taking from here to give there, but we're going to hit the customer back up with something else later.
Yeah.
It can be confusing.
Cause
and
them to struggle anyway.
Exactly.
Yeah.
And it will create a lot of issues from a service industry or where consumers are going to be complaining. They changed my rate last minute. They changed my fees last minute.
Yeah.
When in reality, there are so many moving parts to a transaction and so many parties. And oftentimes, new construction, we don't even know what the taxes are. Sometimes, our debt ratio can swing.
But even in that previous example, they may even say, you know what, fine, let's close anyway, and then you're stuck in your head as a loan officer thinking, is this going to be a buyback? Like, are they going to try and refi this thing out because they're, and just now you're out of that equation? It's terrible because if you might go through 6 months, 7 months of wondering what's going to go on with this. Are they going to default on this loan? Are they going to oh my goodness, that's scary.
And Marcos, that's a funny thought because I am uber obsessed on service and communication and making sure that my clients never become a statistic in one of these bad reports of foreclosures or anything.
Right.
And knock on wood, in my entire career, we've had a clean record. And I'm very proud of that because it goes to show that the financial advice that we're providing our consumer base is solid. Mm-hmm. We never try to redline our customers or bring them to our forehead. We want to make sure that we focus on their lifestyle, their long-term goals, and that we cater into a mortgage product that really fits their DNA and what their goals are. Awesome. And being in debt up to your forehead, I think we can all agree that just creates more stress. And
yeah. It's not a fun feeling, I'm sure.
Yeah.
I feel like at the end of the day, just to keep top of mind, if you have any questions or concerns or confusion or anything like that, speak to your lender, speak to your real estate professional, speak to the source, right? Because it's always, you can go on Google, you can go on, all these news outlets, and you're not going to hear sort of the way that you dissected it today.
Yeah.
It's a good point. And I like to identify our clients as, we want to dig in deep, and I always say financial DNA. I think it's a great term because it allows us to understand everything about them and then outline a product. And people click around, they see rates, they see things, they throw suggestions, like my uncle in Michigan's like, what? Homes are going $300,000 over asking price. Like, that's amazing. I mean,
right.
And I heard the funniest term recently, which I share. It's like, oh, how much over asking price did you go? The price of a condo.
Yeah, oh, wow. Right.
Wow.
Yeah, that's amazing.
That's what's going on.
Yeah.
But when we do take the time to educate our consumers and know and share that advice, I think that they have the empowerment to go out and fight in this competitive market. And when they get the opinions and sideline comments from their family and friends, which I'm sure they're always doing that out of love and trying to help, but it often creates more confusion for a customer. So, yeah. Are we discouraging you from doing your research? Absolutely not. But take the time, block the time to speak with someone, with a professional, and carve out all these details so you don't find yourself at the negotiation table with negative surprises.
Yeah.
Right. I think, for me, the scariest thing about this entire news report, if you will, is it reminds me of a time, so I would say, if I have to just throw out a year, maybe 2008, when, people were being told, don't make your mortgage payments because then the bank will help you and they're going to reduce your rates. And then all these people stopped paying their mortgages. And then all these people were in default and were either doing short sales or got foreclosed on. And if they had just gotten the right information from people, they wouldn't have, lost their homes or basically, been in a position where they couldn't catch up or they couldn't just, get back into normal swing of things. So it reminds me of that. That's this for me. That's the scariest thing about hearing some of these news reports, because I've had people, say to me, "I'm going to stop paying my bills," or
Yeah.
and I can remember from very, very early on in my life, my parents always used to say, your credit is everything. That's what you're judged by, right? When you want to borrow money, when you want a credit card, a car, a home loan, student loans, all this stuff, and probably it's a little bit harder now than it was 20 years ago. You're going to be judged by your credit. And it's very true. So I want to reiterate the fact of, keep paying your bills. It's important to have your credit, as high as possible.
Pay
right?
them on
That's
time.
what you have to go by.
Yeah.
Pay your bills on time.
Yeah.
Yes.
That's a
always.
big factor. In history, just going to credit, 35% of your credit score is built on history.
Right.
So oftentimes we'll get the opposite. We'll have a very responsible credit borrower that says, I'm buying a house. I'm going to close all my credit cards. And all of a sudden their credit score drops 30, 40
Right.
points.
Right.
Because they're
You don't
trying to do
have
the
that.
right thing.
Right.
But guess what? Take the time to speak with a professional.
Yes.
Right.
And identify all these things, because what you did is you shut the door on 35% of credit history by closing these accounts.
Right.
You erase the whole history. Of
Yeah.
credit.
Essentially, it will have that impact. So the best credit scores typically arrive from people that can pay their credit cards and their installment loans on time and in full, in addition to being able to use less than 40% of their total credit limit and keeping those accounts open for the long run. And I've never seen an 850 in my career, believe it or not, which is the highest here for mortgage.
I'm almost there. I'm just
you?
a
I'm
few
close to
points.
it, too.
I'm just a few points shy.
Yeah.
I don't know how I'm
Well-
like 838. I don't know how to get it
Yeah.
higher.
Well, I've never
I just
seen
disclosed my credit score.
843 is the highest that I've seen, and
838.
I got some work to
838?
do.
How you
Yeah.
get to 850?
her grandmother co-signed a credit card when she was 1, and she still has it.
Well, I will say, I tell everybody. I even told my sister this. I'm like, you have to put my nephew on as a authorized user on a credit card early on, even if he doesn't know about it, just
Right.
because it's building his credit a little bit. But it's mixed credit. I'll tell you, you just struck a little chord in me. I remember when I paid off my student loan, it was one of the happiest days of my life. And then I got this notification that my credit dropped like 35 points because I really didn't have mixed credit at the time. And I was like so upset. You know, you're excited because you paid it off, and then you're upset because.
But it all speaks towards education, right? And not just a lot of people. And we talk about this. You know, we're always focused on the public, but sometimes even realtors get it wrong. Because I remember those years of 2008, 2009, where I would hear realtors telling people, "Oh no, if you just stop paying for a couple of months,
They'll take
the
care
bank
of
will." I was like, "Are you kidding me?" It's like, don't tell people that. You know, that's the worst advice you could give someone.
It's so hard to.
So we have to
it's
educate everyone, not just the public, realtors too.
It's that
I
fall
agree.
down that's so hard to get back up from, and it to put things kind of in perspective. Your college GPA, right? Once you really mess that up, it's really hard to get that back up, and especially in such a short amount of time. So, you know, I would have to just say, you should always make it a priority to get your credit up as high as possible, always paying your bills on time. You know, establish your credit worthiness. You never know when you're going to need it.
Yeah. You want to hear something crazy about the GPA situation? They say that your first semester is usually a reflection of how the rest of your 4 years will be in college. So you have to be really good. Yeah, because if you can focus and get good grades in the first semester, where it's the craziest time, where you're in a new environment, you're getting to meet new people, and if you can focus enough to keep your grades up, chances are that the rest of the rest of your time in college, you'll be able to manage just fine, because that's the most chaos right at the beginning.
And
if you're good
that's
there,
so true of so many
your
things.
GPA.
Oh, wow.
That's so true of so many things in life, right? When you think about a pregnancy, the first trimester.
Yes.
When you think about a new president, you know,
First
it's the
90, 100 days, or the
Right.
cabinet gets formed. You know, all these decisions get made in the first 100 days of any presidency.
Yeah.
That's why they're so important. A trimester, if you figure most doctors tell women, don't tell anybody until you've gone past the first 3 months. You know, that's when you know that you can tell everybody that's going to be fine. You know, the whole thing. Same thing with college. That first semester, the first 3 or 4 months, really. And then really, you know, by the first 6 months of college is really, you're formed already. Like, you know who your
You're
friends
gonna
are.
make it or break it.
Yeah, yeah. So it's
we
important.
can tie that into the mortgage industry actually, because with self-employed borrowers, that's why we look for a 2-year minimum
Right.
self-employed history, because statistically, and I don't know the exact stats, but if the business can make it its first 2 years, then it's going to make it for the long run, and that's why often we look for that 2-year history
Awesome.
as a minimum. And when it goes back to the loan level pricing adjustments, I just want to go back to that, if I may.
Mm-hmm.
Think about it as car insurance, right? If I have 7 automobile accidents in 1 year,
Oh boy.
God forbid.
and I
Oh,
go
man.
for car insurance, that level of risk will make my premium higher. And in the mortgage industry, if you have a credit score that doesn't show that you have a stellar history with previous lates or mismanaging the use of your balances or your limits, that equates to that lower credit score. Now, look, there are instances in life where things can get in the way, right? Health factors can get in the way, and you may have to pause making bills because you have medical collections and you're going through trauma from an illness and you have to leave your job. And there are times where we can work and fix the credit and boost that up. There are actually many cases where we can work to fix the credit. So it's not a matter of being, not everyone with a lower credit score has irresponsible activities. There are circumstances that can come into life that can trigger that as well. But there are ways to manipulate the scores and fix them and pay certain balances and call certain creditors and work your way around it. So if that's a challenge for anyone listening, there are ways to fix that and still get you into a home in the short term.
Awesome. I'm glad you said it.
Yeah. I have a 17-year-old, so that whole statistic
You're going to
about
pay
that.
attention to.
I'm paying attention because
Don't forget to
my
add
car
him
insurance
as
went up $4,000.
Oh boy.
Don't forget to add him as an authorized user.
Oh,
on your...
well, we have done that. And,
Yeah.
a lot of the credit advice and a lot of the stuff that really motivated me to go into this business, was influenced by my grandmother, who always taught me a lot about credit and financial responsibility. But, yeah, I've had a credit card. If you go on my credit report, it'll show that I've had a credit card for 30 years.
Yeah.
And
I have that too, because my parents
Yeah.
added me on as an authorized
Yeah.
user, like when I was, whenever it was, 16, 17,
It's
I
funny.
don't know when it was.
I have a credit card that I've had since 1990. Believe it or not, I was in
The year I was
freshman
born.
year. I mean,
I wasn't even born.
my freshman year in college. Yeah, my actually, just about out of high school, and I had this credit card. It was like for students.
Did they have credit cards back then?
I was about to
Well,
ask the same question.
It was right after
Wow,
the
Marcus.
dinosaurs
Just
left.
kidding, just kidding.
It was right after the dinosaurs got hit by that meteor.
Marcos will walk 25 miles to school.
Right.
With
with
one
all-
shoe and one
uphill,
boot.
uphill in the snow, both ways. It was
One
uphill
shoe, one boot.
with one shoe on.
There were no water bottles back then either.
No.
No podcast back then.
I'm cracking up because my card, I was an authorized user since '92, and I was only 10. So
Oh, wow.
I'm with you,
Look at
Marcos.
that.
We're,
Good.
we'll be the proud oldies in the room.
Right. That's awesome.
Wait, I think we're like almost the same age now.
Oh man. So Santos is the baby in the room.
Yes. I was born 1993.
Wow.
Oh my
Oh, wow.
goodness.
Wow. I have credit cards older than you.
Yeah.
Wow. Okay.
How old are you? As old as a credit card? How much are you bidding? As much as a condo.
Right.
One condo over list price.
Right. Exactly. That's fantastic.
Wow.
Well, when we get to the part of this,
I'm younger
of the
than
show-
Marco's credit cards.
Right, right. They're one of them anyway. When we get to this segment of the show, we like to call the rapid fire segment. We ask quick questions. You can give us a quick answer.
Sorry to interrupt you there. Before we go into the rapid questions, I want to add something because Alex and we share the same passion for books, and we read similar books. So I wanted to ask you, what is your favorite book, and what is the book that you have recommended the most?
Oh, good question.
It's the same answer on both. Okay. And, I met a gentleman, before I address this, I met a gentleman years ago who had one of the most philanthropic jobs that I've ever heard of. He worked for a pharmaceutical company, but he was the worldwide director for women's health. And he grew up in India. And when he was 8, his mother handed him this book. And it's called How to Win Friends and Influence People. And
Oh,
it's
Dale
Great
Carnegie.
book.
Dale Carnegie. It's the book that I recommend the most, and it's a book that I often read 2 to 3 times a year, just to remind myself of how I like to carry myself, what's the expectation from others, and how to live a long life of servitude and gratitude, which it's not a direct message in there, but that's something that I extract from that book, besides being a good individual and asking the right questions. But this gentleman, there are women across the entire world that, and it's a huge percentage of women that don't make it to live to see their children born for poor health conditions. And so this gentleman ran a division that would go around the world, and particularly in third world countries, and rescue women and provide health aid for women that were victims of rape, or human trafficking during their pregnancies, and help them deliver babies and keep their lives.
Wow.
And when I met this gentleman, I was reading the book for the first time, and I found this guy so interesting because his life was an example of everything that I read in the book, the way he spoke, the way he carried himself. And I said, I got to ask you a question. Can you tell me, you're an amazing person. You're one of the most amazing people I've ever met. You're so interesting. I love hearing from you. And we've done lunches together. And now this gentleman has sat, with the Queen of England to talk about and discuss this in past years.
Wow.
And he's like, one of the things that changed my life was that at the age of 8, my mom handed me this book. And I've made it a part of my life, and I've read it throughout years. And so I wanted to replicate that. Now, I had already read the book when we had the conversation, so we got to exchange a lot of good lines from it. But he was the person that influenced me to read it more often and so sort of live by it. So I will not say that it's my Bible, because I respect the Bible a lot, but it is something that I hold very special to my heart. And I've introduced the book to my 2 older sons. My youngest one's 10, pandemic. I'll introduce them maybe next year, because I think the pandemic sort of slowed down their development a little bit.
A little bit later on, but he'll get to it eventually, right?
He'll get to it. And then there was a recent book that I read, in the last 2 years, which was Atomic Habits, which I've also passed it down to my kids.
I love that one.
Yeah, and it just helps you deal with procrastination and manage things and improve yourself in every aspect of your life, whether it's relationships, business, personal health. I was a baseball player, and the opening lines, it's about his baseball and high school, and even before high school how he was injured, and so I found that book to be very special as well. I thought you were going to ask about my acting career, Santos. I want to just...
That's for the next episode.
What we really wanted to ask is if we can book you to design a kitchen this weekend. after your last loan closing today,
Right.
we want to know if you can design a kitchen.
Do you have some time
us.
for that?
I may. I actually still love that a lot.
That's a great business proposal. You can do the loan. You can help finance the dream kitchen with some renovation financing.
Little 2 or
and then you
3K
can design
action.
it.
I'll have to get a show on one of these networks and make millions of dollars, because they just make it look so easy, right?
They do, right? Oh, 1, 2, 3, half an hour.
It's not that easy. You don't go and look at 3 homes, find one, and then it's
At the end of the half an hour show, everything's done.
Yeah.
I
It's
think
not
he
a
had like
2-week
a
project.
really good combo, because he was doing the open houses. He would look at the kitchen, right? And he'll be like, "Oh, I have to do this, and that." And then you run with that idea to IKEA and be like, "Hey, we're going to make some money with this." Right?
We actually did that a few times. But,
Nice.
here's something interesting. I remodeled my kitchen 4 years ago. And I said, I'm going to give the pros the time to go out and show me what they can do. So I had designed the kitchen myself up front with what we wanted. We wanted to knock down a wall. We had 5 different companies come in and design the same thing.
Wow.
Oh, wow.
And I'm like, you know what? I'm not paying $65,000. I did my kitchen for under $20,000. I bartered with one of our clients who was in construction for the demo. And then we built the kitchen cabinets myself. I designed it myself. I hired a tile guy, and I spent more money in appliances than I did between countertop and cabinets.
Wow.
Now,
Amazing.
look, I am a big advocate for allowing the professionals to do their thing. In this particular case, I just happen to be able to have closer resources to help me manage it and keep it at a low price. But I was willing to do that, but after all, if they did the same thing I designed, I was expecting new ideas, something modern, and
Right.
everyone that comes into my house loves my kitchen. And I'll share one more thing. We have a pot filler behind the stove. And my wife thought that was the most ridiculous thing. She's like, we don't live in one of those big mansions that you're always financing, and this is a modest home, and we got 3 kids. Why the hell do you need this? Everyone that comes to my house compliments that pot filler.
Right. It's one of the.
And
Do
I
you
just
pay them?
point
Do you pay
at
them to
Christina. I'm like, you
How much
see?
you're paying? How much are you paying for that?
It was when you have the walls open.
But do you pay them to say
I'm
that
saying
about
like
the
you're
pot?
paying,
no,
you're paying
no.
the best.
No. It was a $350 upgrade. And,
Yeah.
But when you have
That's
the walls,
huge now. Like you have to have that now,
And you know
especially
how-
if you have a renovated kitchen.
Yeah.
a pasta pot, like a pot of pasta that
Sure.
when you got to fill it up, or you're doing corn, you're boiling corn, like carrying that. It's look,
Sure.
can we carry it? Yes, but how easy it is to just put the pot in there, open that lever, walk away, cut
Right.
some veggies, walk
Right.
to this side, do something else,
Right.
and now your pot of water is full.
Right.
But I love it, and every time someone compliments, I look at my wife and I say, "You see."
I think it's a must-have right now in kitchen renovations.
In the
Doesn't
early,
matter what. It used to only be very, very high-end homes. So I have to agree with her on that for a small piece of it. But now it's almost a must-have. And
When the walls are open, you got a water line running through there anyway. It was a
Right.
$300 upgrade. The actual pot filler faucet itself. That's
Yeah.
all it was.
in the early 2000s, I got a chance to go to California, and I was visiting. I was with a couple of friends out there and visiting someone's house, and I get to the house, and it's literally the house was worth back then about $85 million.
Wow.
It belonged to. I'm sorry, Michael. I'm going to tell your name out here. Michael King. He's the producer for like Oprah Winfrey's show and Dave Letterman's Big Pants, the Worldwide Pants production. This guy
Wow.
was the producer of all these shows. And going into his house, and I see this kitchen that was bigger than the office that we're, that this building is in. Like this whole building, the kitchen.
The kitchen.
Wow.
And it had a couple of those stoves, and I look and it's like, what is this odd thing in the back of the stove? And it was the pot fillers, and he had 2 of them on 2 separate sides, and I'm looking at this, I'm like looking at it, so that looks like a faucet. And I'm going, oh yeah, no, that's what it is. All these houses around here. I was like, all these houses, and then I realized, yeah, these are $50 to $100 million homes. Of course, they have this fancy stuff. And then a few years later, you start seeing it trickle down into smaller houses. And it's like, this is the greatest invention ever, But it didn't catch on until like maybe 10 years ago around here.
Yes.
But it's a great thing to have in your kitchen, a pot filler. So if listeners out there, that's. If you want to ball, as they say, that's a balling thing to
Yep.
do.
It is. And you can do it on a budget. Just tap into that water line.
That's it.
Hire a professional for that. I never touch plumbing.
Yeah.
Never.
And electricity. You definitely want to
Yeah.
hire somebody else.
Agree.
Otherwise, you look like Don King with your, with your hair sticking up. Anyway, back to the rapid fire. Dunkin' Donuts or Starbucks?
Starbucks.
Nice. All right.
I feel like I'm going to be judged by that, but
No.
There's no politics.
No,
here. It's totally
there's
cool.
no judgment. Judgment-free zone.
the baristas at Starbucks know me by name before I walk in. I feel like the
Nice.
mayor now. Like, hey,
Your cup is on the. They're waiting for you with your name on the
That's
cup.
the best, though.
I
I
did-
appreciate that service. That level of service
Yeah.
to me is worth. I'll pay double for something. Just
Yeah,
to
good
have
service.
That.
My
They tip
cup of
extra.
coffee is sort of controversial, though, and hopefully I can say this. So,
is
tall is a small coffee.
Right.
I like blonde roast, and I drink my coffee black. So I go in, I say, can I have a tall black blonde? And usually
interesting.
the person behind me will tap me in the shoulder and give me this look, and then I have to turn around.
Like you're at the wrong place.
And oh no, I mean a small blonde roast coffee black because I don't put any sugar or milk on it. And they're like, oh, okay, I get it.
Right. You have to
I've done
explain
3
yourself.
refinances from that conversation though. So Starbucks
Oh.
is my second office.
Nice. I love it. So,
Hold on, we have to
I
pick
love
up Santos off the floor.
Oh, that's hilarious. So, hang on. Do you eat in a car or a restaurant?
I dislike eating in the car, but I found myself having to do it just because of a fast pace of life.
Every once
this,
in a while,
in
yeah.
this business, I feel like you don't have a choice.
Yeah.
Yeah.
Yeah. Now my car drives itself occasionally, so I do eat in the car more
Nice.
often.
That's right. You have the Tesla. I forgot. Favorite food for lunch?
I usually skip lunch,
Okay.
but if I have to eat something, it's usually something with grilled chicken.
Okay.
I'm
Yeah.
really convinced that you don't eat because I don't know if I've ever seen you eat.
It's a rare thing. It's true. He can go a
I
whole
can't
day
even
on
like hang
coffee.
around you because I don't skip a meal.
Here's the thing. No, from 3 p.m. to 8 p.m., I eat like the world's ending. That's the problem. And I'll eat anything. That's the problem. I'm reaching an age now where if I eat 2 slices of pizza, it sticks with me for like 2 weeks.
Oh boy.
So I used to make fun of those people when I was younger. Oh, what are you talking about? I'm going to Wendy's after the gym. It's fine.
Right.
I am way past that now. It sticks to me. So it's like an extra day at the gym.
Oh man. It's funny. I just had that conversation with Santos yesterday. I said, "Oh man, I'm having a slice," and he's like looking at me like, "Are you sure you want to have that slice?" And I'm like, "I'm gonna have to do 7 miles or 8 miles on the bike tomorrow. Then walk it a few more miles, get on the treadmill."
To be honest, I wanted to have a slice too, but I'm doing intermittent fasting, and I was on my fasting hours. So I was looking at Marcus. I was like, I wish I could have one too.
I don't think I can have your level of discipline, Santos. You're at a different level. God bless
He
you,
is.
man.
Everybody's
I
trying
wish
to
I
follow
could.
him. Everyone's trying to follow him, but they can't keep up. Favorite vacation spot?
Oh, it's gotta have palm trees. But lately, my wife and I have really been enjoying the Keys, the Florida Keys.
Nice.
So,
Any particular key?
Key West is good for about an hour for us. So everything in between Key Largo and Key West.
Yeah.
So we cannot not go there and not visit Key West for a day.
Sure.
Yeah.
But we sort of Isle Morada, Key Largo,
Okay.
which are the earlier ones, or at least if you're driving,
Right.
Key Largo's the first one.
The first one, yeah.
There's 2 places there that are on the Gulf side. The water's like a lake, and you get the most amazing sunset.
Yeah.
So I would say the Florida Keys when we're in the mood for tropical. But otherwise, put me on a mountain in Colorado or Wyoming, and I'll
You're
be
happy.
snowboarding.
Yeah.
That is
Snowboarding, yeah.
Nice.
that's my individual happy place. It's where I can sort of balance my thoughts. It's my
definitely-
yoga.
I definitely like the Key West. For some reason, anytime I go there, I'm like, you take me to the point, right? Because you want to be 90 miles from Cuba.
That's
from
right.
there. I for some reason, it's not a particularly exciting place. It's literally just the southernmost tip of the U.S. So it's exciting to know that you've been there.
That you've journeyed there, right?
Yeah.
Sure.
And but yeah, I think Key Largo, all of those keys are great, and a lot of good dolphin watching out there. You can see dolphins literally driving as you're driving down. Have you ever noticed that?
Oh yeah.
Yeah, it's crazy.
7 Mile Bridge, and
Yeah.
one thing that confused me one time down there was all of southern Florida. I had fish tacos, and it said dolphin fish, and I'm like,
Uh-oh.
I thought it was actually dolphin. I'm sorry. I got that clarified real quick. It's
Right.
not dolphin, but that threw me off.
That would be
Yeah.
like, wait a minute. Let's stop this right here.
Like, what is this? Did I have too many margaritas?
Right. Favorite town in New Jersey?
Favorite town in New Jersey? I love Madison, New Jersey. And one thing that I love about Madison, New Jersey, is that it's a small town. It's got a beautiful train station. I think they've actually filmed some movies there. But their downtown area, you rarely see empty retail space. So you get that feel of Main Street, USA, and you have the deli shop, you have the Colombian bakery, you have the bagel shop, you have the coffee shop that used to be an old gas station, and now it's like a former Porsche racer owns it and modified it to this avocado toast and coffee type of joint. And then you got one of my favorite Italian restaurants are there. And then they do a Friday night farmers market, and the whole place gets packed.
Yeah.
Wow.
So you have a lot of culinary great options. You have Drew and another university that are walking distance. So you
Right.
get the college, you get the downtown USA. It's full. It feels vibrant. It's got great food. It's got the train station.
It feels like Magic Kingdom. You know, you just described
Yeah.
Magic Kingdom. You know, you walk in, the
That's
train
right.
station's there. It's the same situation.
That's
going.
funny. I've never thought about it that way, but yes, that's exactly what it is.
Yeah,
And
Disney
my
World.
wife grew up in Madison, so
There you go.
kudos to her for bringing me there. But that's not where I live, but it is one of my favorite towns,
Yeah.
just because of the downtown aspect.
Yeah, it is very nice, but it does remind me of Disney World, Magic Kingdom for sure.
Yeah.
Thank you for coming. we always want to say, thank you for you're always enlightening us. So with your information and grace us with your charisma. We like having you on board, and we're gonna have you back just to talk about acting.
Exactly. Yes, that's
because I think Santos is
Wait
curious.
a minute, I'm more interested in the kitchens.
We're gonna do a follow up on that.
Yeah, we're gonna have to double up on that show.
Well, I am incredibly grateful to be here with you guys. This was fantastic, and I do look forward to the next one. My wife found my headshot from acting, by the way.
Oh boy, you're gonna have to bring it the next
Yes.
The jokes have not stopped.
Oh,
No.
no.
The hair was longer.
Well, you definitely have to shower.
Yes, we need that.
But I'll share this with you. In the town that I live in, I am I live. My house backs up to Meryl Streep's childhood home.
Oh wow.
And ironically, one of the first acting gigs that I did was I was a funeral mourner and a construction worker in a movie with Al Pacino and Meryl Streep called Angels in America.
Right.
Wow.
And one of the first scenes that I did, I was the construction worker sitting in the subway next to Meryl Streep.
Nice.
Now, she never spoke to me. Of course, I was an extra. She's,
Right.
Academy
Meryl Streep.
Award.
Right.
It's Meryl Streep. But I silently sat there and waved, say hello, and sat and did my role. And we shot that scene for about 2 hours. And all I had to do was sit there and look like an 80s construction worker as the subway went in and out of the station from 5 a.m. to 7 a.m.
Wow.
And now I back up to her childhood home. So that was sort of an ironic.
Yeah, it's almost a full circle moment there.
Yeah.
That's crazy.
Yep. But thank you again. This was fantastic.
All right, Alex. Before we go, if our audience wants to find out more about you, where we can, social media, website, where they can do it.
Oh, absolutely. So I'll keep it simple. If you text the word Alex to 36260, you'll get an automatic response with my interactive business card. And you can also find me on Instagram at Arcelay MTG.
Excellent.
Awesome. So this is Realtors Radio Network signing off.
Keep an ear out for the next episode of the Realtors Radio Network, where Santos Garcia, Marcos Suarez, and Dawn McCullough share their wealth of real estate knowledge. We hope you've enjoyed the show. Make sure to like, rate, review, and share. Find us on social media at Realtors Radio Network. See you next time on the Realtors Radio Network.